Well, hello, traders and investors. Today is the last day of the month. It is August 31st. It is a Monday. I have no clue where the summer has gone, but let's get into it right now. I've got a lot of stuff to talk to you about. It's a fresh new week. Let's talk about the news that's setting up, and then I'll talk about global economy, then I'll talk about U.S. economy, and then I'll go into the stocks. Remember, we do everything from the global perspective, narrower, 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 and narrower. So this week is going to be a big week for manufacturing and construction. Why? Well, we have the PMI manufacturers final, we have the ISM manufacturing index, we have construction spending, we've got factory orders, goods and services trade, aside from and productivity and cost to and employment situation. But the biggest reports of the week, in my opinion, is going to be the ISM manufacturing index, jobless claims, and employment situation. Now, let's get into and again, I'm looking at the moving average on the jobless claims. The moving average, anything below a million would be, they haven't updated it yet. They usually update it second half of Monday. I'll get into that. I'll get through the expectations, but the 4-week moving average is right around the 1.17 million. Anything below 1 million and will be below the 4-week moving average. As long as the 4-week moving average is moving down, that means unemployment numbers are looking better and better. So let's start with the global economy. Wall Street turned in its 5th straight weekly gains, and China manufacturing growth held steady. U.S. stocks benefited from the Federal Reserve Chairman Jerome Powell, who can't keep anything close to his vest, announced strategy change that could keep interest rates low. The change, dubbed average inflation targeting, they're getting really creative, folks, could hold rates down even if inflation hits the Fed's 2% target. And that was a big, big plus last week. After the market heard that, it got fairly bullish fairly fast because everyone was anticipating that the Fed would have no need to put more money into the market once it's reached its 2% target, because that's where we were in growth. Our GDP was above 2%. But now they're saying they're going to keep this average inflation targeting at 2%. They're getting very, very creative. Now, I'm going to tell you guys something I shouldn't be saying. All this creativity, it's going to bite us in the ass. It's going to bite America so much in the ass, but we're nowhere near there because our deficit keeps getting bigger at the expense of these factors that keep propping the stock market higher. But it's a new world out there, folks. It's a world of momentum. But again, gold markets are getting steady. VIX is staying above 20. The bottom line is there's a lot of work. There's a lot of momentum is overbought. The percentage of stocks above the moving average. There's a lot of factors that are pointing to a upcoming sell-off. We don't know how big it's going to be, but there is going to be a minor correction in stocks. It almost has to happen because the momentum levels are just overbought. Japanese markets were lifted by gains for 5 major trading companies after investor Warren Buffett announced that it bought stakes of just 5% of those companies. Global stock markets recovered most of this year's loss despite rising COVID infections and the numbers in the United States, Brazil, and some other countries. It really is amazing. I gotta give Trump some props. He really is putting the heat under the butt of the Feds. He's heating them up and he's making them focus on the stock market. And again, it's really good right now, but over the long term, it's going to bite us in the butt. S&P 500 index record highs propelled by big gains for technology investors. And if we were to look at the most strongest stocks, we got L Brands. Remember I told you retail's making a comeback? Remember what I told you guys about UPS and FedEx? Nothing changed. This was about 3 weeks ago. Nothing changed. Salesforce is still up there. ABMD is up there. PayPal is up there. FCX is up there. That's a big one right now. And again, you got basic materials, and you have power companies, and you have transport companies. You have companies that basic materials, productivity. You have companies that are not reliant on the technology sector very much. That's key. ROL, power. Let's see here. Where was the other one? DE, ROL, and power. Those three. Those are not tech companies. Matter of fact, if you look here, and I showed you this last week, I showed you that basic materials and industrial are now, and I want you guys to understand, technology and consumer discretionary, they're always together, but so is material and industrial. They kind of go together. But these are very defensive sectors, and we're starting to see upside in those sectors on the S&P, as you will soon see. I think I just rhymed. So here, you got power, industrial. You've got Deere, industrial. These are industrial stocks, and they're moving higher and higher. And again, as I mentioned before, we now have a lot of stocks. This is a shorter term time frame. Let me go to the major one. This is the longer term. Didn't mean to confuse you. But again, as long as shippers stay in the upper place like FedEx and UPS, we're going to see higher and higher retail sale numbers because we are buying things online and they're being shipped to us using FedEx and UPS. Where are people buying from? They're buying it from Gap, L Brands. Let's see where else they're buying it from. You could see, this tells you the whole story. Best Buy is hot right now. Fortune Brands, Home Security, Hanes Brand, Target. These are hot right now. But notice how broadly we are moving right now. This is fairly broad compared to how we were 2 months ago. Even a month ago, we were more focused on tech. It's becoming broader and broader, which is really good. But I want to show you guys something different today. I want to show you, instead of all the hot stocks moving higher, I want to show you stocks making 90-day lows. This is very important because, look, markets are at new highs, but you got to pay attention to stocks making 90-day lows, because stocks that are making 90-day lows when markets are making all-time highs usually tend to go down the fastest when market pulls back and have the most vulnerability. So we got Gilead Science. It's breaking down. Look at this thing. Look at this chart. This thing is breaking down. This thing is near 6-month lows. It's actually below 3-month. These are 90-day lows we're looking at, but it's at near a 6-month low. We're way into the 3-month low. This is closer to a 6-month low. GSK, it's more moving sideways. I would be cautious with this one because it's near all-time highs. But again, if it keeps breaking down, not good. Exact Science, breaking down, making 90-day low. Notice these are pharmaceutical, biotech companies, medical companies for the most part. And look, we got the ultra short QQQ, we got the short pro shares. I would ignore all of these bear or short ones, because if the stock market's making new highs, then the inverse indexes are obviously going to be making 90-day lows. So there's really nothing for us to see here. So you got this one, avoid this. This is it's just part of 90-day lows because indexes are making 90-day highs. So if you take away this one, the QQQ, if you take away the Dow, if you take away the semiconductor, if you take away the spider, you're left with medical biotech, Cal-Maine Foods. I don't even know what this Cal-Maine Foods is. Looks like it could be a pet company. But again, it's breaking down. It's making 90-day lows. This is a 6-month chart. Not pretty. Breaking down. So you got healthcare, biotech, insurance, EverQuote. EverQuote is not looking pretty. And I would be shorting EverQuote right now. So I am not hot on EverQuote. Arvinas Operations. Let's see what kind of stocks these are. ARVN. Let's see. ARVN. But again, I wanted to, strong sell. Look at that. Someone's agreeing with me. Let's see. What kind of stock is this? Biomed. Look at that. Medical. What a coincidence. So again, that's medical. Cal-M. Let's look at Cal-M. I bet it sounds like a pet food, right? Oh no, it's livestock. Okay. Well, production, packaging, fresh eggs, health. It's not looking really good right now. Let's look at the chart. And you can see the ticker symbol right here, CALM. Not looking really good, but I would wait for it to break the 200-day line. Like ARVN. Let's look at ARVN again. ARVN. ARVN looks ready to go. Yeah, see, below. We want to see this cross, and it's low. I mean, this thing has nothing holding it up right now. Ever sounds like an insurance company. Ooh, yeah. See, below the 200-day line. Let's see. Insurance shoppers. Yeah, EverQuote is not looking pretty. So I'm pretty bearish on this EverQuote, and I'm pretty bearish excess science. Let's see here. Oh yeah, definitely below the 200-day line. Biomed. Folks, a lot of these biotechs are breaking down. I mean, look at this. You got 1, 2, 3, 4. This is insurance and this is agricultural. So you got one biotech, one medical, two medical, another medical, three medical, four medical stocks making 90-day low, a egg manufacturer or egg production, and a quote company. Again, those are 90-day breakdowns right now. And again, I would be very, very cautious about these stocks. I would either avoid them or sell them short. And again, there is some, if you look at the, let me show you something here. If you look at the major indices, and again, I just want to kind of give you guys a good morning outlook of what I'm looking at here. If you look at the major sectors, healthcare is now 1, 2, 3, 4, 5, 6. And if you look at it on a 1 month basis, 1, 2, 3, 4, 5, 6, 7. XLV, let's take a look at XLV. Remember, a lot of the companies are not working on research for COVID. Those are not doing well. So healthcare is still doing really, really well. Other sectors are outperforming it, as you could see here, like tech, consumer discretionary, industrial, financial, consumer staples, basic materials. But healthcare is still positive over a month. But if you look at these stocks, if you look at these 90-day breakdowns, so when you see a sector making all-time highs, and you see stocks in that sector making breaking down, what do you think is going to happen to these stocks when the index starts cooling off a little bit or has a little pullback? These stocks are going to go further down. The strong get stronger or maintain their relative strength, and the weakest stocks start going down. So Gilead Science, GlaxoSmithKline, Exact Science, Arvin, no. And then again, you have this Cal, Mind Foods, and EverQuote. They're not here nor there. I would kind of wait and see what happens with Calm, but EverQuote, this thing is bearish. And again, think about something right now, folks. The markets are overbought. They are overbought. Put to call ratio. Let me show you the put to call ratio. Oops, wrong site. We're looking at like 3 different sites right now to get our info. Actually, probably like 6 or 7 sites. Look at the put to call ratio. The highs are getting lower. We already reached 62. Look at the momentum levels, folks. I'm just pointing this out to you because momentum levels. Look at this percentage of stocks trading above the 50-day moving average in the S&P, 80th percentile. Look at this. Let me just move this. We went all the way up. We went a little bit down to 66, and now we're at 80 again. Folks, it just doesn't stay around here. This is a monthly chart of 20-year momentum levels. When X amount of stocks move above the 50-day moving average, we cool off. And if you look at the 200-day line, it looks like it may be cooling off already. It's starting to come up, but I don't think it's going to go up too much. I don't think it's going to go to the 80th percentile before coming back. If you look at this, it's still bouncing back from the lows that we saw post-COVID-19. So the market is bouncing, but it's running out of momentum. Put the call ratio, momentum levels, they're all telling us the markets are overbought. And most importantly, if you look at the chart, you will see here, as I always show you guys, higher we went. I don't have the RSI here. Oh no, I don't have the RSI. RSI highs are moving lower. Same thing here. RSI moving lower. We're due for a cool off. Again, be cautious out there and pay attention to these stocks. Guild, JSK, EXAS, and ARVN. I would say those are definitely the 4 stocks that are on my chopping block right now. Now, I've got something big for you before I let you go. Folks, I don't want to alarm you, but you could be missing out on the potential to trade a stock with 100% certainty. Yeah, I said it, 100% certainty. Let me break it down for you. Every single year for a decade now, certain stocks have been skyrocketing on the exact same date 10 years in a row. Same date, 10 years in a row. No missing years. So if you had invested in T-Mobile during its prime window, for example, for the past 10 years, you wouldn't have lost once. And this stock isn't an outlier. It's an average stock. Now, during this broadcast, we're going to give you 10 picks. 10 picks on us. You can't miss this out. You cannot miss this out. This is the coolest thing ever. We have been getting such positive feedback about this that I honestly do not want you to miss out. There are plenty more where it came from. Be sure to click on the link so you can get in on the next one. And again, we're going to give you 10 of them. 10 of them. Get a piece of paper, get a pen, get ready to write stuff down. You don't want to miss primetime windows. It's happening today. Follow the link below. I'll talk to you guys soon. Have a great week. Bye.